KDA has been moving almost exactly as I've predicted for quite a while. Hasn't been too hard to predict because it's going sideways. So let's go ahead and take a look at more of a timing aspect on when sideways lack of volatility will expand. That's really all you can do on KDA right now, given that its price is literally falling exactly, almost exactly where I've been thinking it's going to go. So the most value that I could add on top of that from my previous videos, which anticipated price going into this triangle, writing this trend line, interacting with this as resistance. That's why I made this triangle before it jumped in here, and this is exactly what's happening, right? And I mentioned that if it goes in here, it won't break out until this purple line, which is the first of the month. So in that, I think it was 2 or 3 videos ago, where I said, I think this is going to happen, and the volatility won't increase until after the monthly, the October candle closes and the November opens, right? Which is the same thing. Happens instantly. So it has met that. Now all you're looking at is you're going to need to have the origin lines too. So here's KDA. I think you can fit it all on a 4-hour chart. Nope, 8-hour chart. Yeah, so here's KDA on an 8-hour chart. And you'll want to try to do your best to do origin lines like mine. Absolutely feel free to copy them. Don't need to credit me, anything like that, because most people, at least who are on my channel, know that these are my thing. If I can have a thing, but copy them, right? And then once you zoom in after copying them on a larger time frame, like daily or 8-hour or whatever, then you're essentially dealing with one origin line that's being touched right now with this horizontal that's right here. So all that you're looking for is a breakout above $1.40, which it's already tested once, or the bottom trend line, but I can't give you one price level because look, see how it changes? I can't give you one price level. It's an origin line, it goes up, right? It's slanted up. So you need to draw the line. It's not one level. And the volatility will expand once it goes past either this origin line being used as support or $1.40. There are 2 main ways that price will break up and out of here. A, it'll get above and then come back and use it as support. So it could be a big break. It could be 10%. And if you see price not interact much with $1.40, but then go up to $1.60, just realize it's probably going to come back down. You'll likely have a re-entry point if it's going to stay long, right? If Bitcoin's heading down as KDA comes back down to this, I wouldn't try to use that as support and trade long. But 2 main ways that this could happen. You would see a breakout to the upside. Price conducts what I call a punch high above an area of resistance. But a punch high implies you don't consolidate under it. It implies that specifically. So punch equals no consolidation just under it. But that's what I'm getting ready to cover next. So regardless of what this does, gets in an uptrend, punches through, comes back, finds support somewhere here, maybe even overshoots this, forms an uptrend, gets on top of it, maybe tests it a couple times even, but once it takes out the punch high, that's when it'll accelerate to the upside. So the way this works, it could easily stick the landing perfectly, like this. That could happen as well. But regardless, you'll have a punch high, it'll come back down to test 140 almost exactly, and you have your probabilities of trading up with confidence, they just go exponential, is when the punch high is taken out. That's one way you'll see price break up. Another way you can see price break up is if it can put time somewhere here for a while. And then if it breaks above, then it doesn't have to come back down because it already bowed down with respect to that the 140 line. You can respect something from the top or the bottom. You just usually have to respect the line before you pass it. And to the downside, it's not going to be quite as clear. I don't think. But the upside move will be, I feel it'll be a lot clearer. Because here you're going to have horizontal people muddying up what's going to happen. Because not everybody no one else really has this line. And if they do, it's not, they might have it on a micro sense, but they're not going to have it drawn back all that way. So the thing here with this is you do have an obvious horizontal consolidation, and a lot of traders, they're going to trade down on this sucker once this area right here is taken out. So, hell, maybe, honestly, maybe the same thing would happen. So if you're trading to the downside, you're going to need this horizontal on here, because to the downside, you could easily have price come outside and down below the triangle, use it as resistance, take out the punch low here, but then find support from a different set of traders defending this horizontal, and then it works its way back up. So because there's a different set of traders with a different yet obvious area to defend as bulls, the typical way that price breaks down out of a shape, it's not going to be as dependable as to the upside. Does that make sense? So really what you're going to do here is it might be safer to essentially put a triangle on a triangle. Once it breaks out of this triangle, yes, the idea of getting an entry becomes better, but trading one specific way after that triangle is broken doesn't become obvious until this triangle is broken. So breaking the bigger triangle, that's your heads up. Okay, begin being interested. Probabilistic flips to the upside or downside don't happen until this triangle is worked out of, because a different set of traders will be looking at that. So it kind of muddies the water a little bit, but still you have another triangle to look at. So just keep aware of that, and that should get you through with KDA to the upside and to the downside. And anything in the middle, well, it's just the middle. You can't really do much there because it's too flat.